Welcome to Stocks Review. Click the subscribe button for more up-to-date short stocks and portfolio review. Today we are going to review our 25 growth stocks portfolio, but we will review some important financial news first, as changes in the financial environment may greatly change what stocks the market favors in the short or long term. The market has been down this week and may present an opportunity for buying and accumulate equity. The S&P 500 and the tech-heavy Nasdaq fell by 1.2% and 2.1% on Thursday, capping a losing week shortened by the Good Friday holiday. The Dow fell 0.3%. There are countless factors contributing to the fluctuation of stocks, with short-term fund flow between different assets having the greatest impact. The 10-year treasury yield is up to 2.82%. This may cause some complicated rippling effect throughout the world economy. Funds may come out of treasury initially, and some stockholders would try to buy in due to increased yield. The increase in treasury yield also drives down the valuation of stocks. Investors have been adjusting portfolios to price in the higher possibility of the Federal Reserve raising interest rates by a 50 bps hike in May. Cementing such a view were increased inflationary pressures, as annual inflation hit 8.5% in March, a new 40-year high, and while core inflation eased, markets will wait for further data to gauge if inflation is peaking. Along with runaway inflation, the job market has been showing signs of being extremely tight, which, in turn, brought forward the expectations of sharper interest rate hikes to cool an overheating economy. The oil price has been rising this week. This will increase the cost of companies and individual consumers. It will also further increase the inflation through some chain of cause and effect throughout the world economy. This will potentially hurt the profit margin of stocks and decrease the revenue by reducing the purchasing power of consumers. However, it is good for oil stocks. WTI crude futures bounced back from earlier losses to $105.9 per barrel on Thursday, extending sharp gains of the past two sessions to levels not seen in 2 weeks, following media reports indicating that EU leaders were closer to a phased ban on Russian oil. The gradual ban would give time for European buyers to look for alternative supplies or future drilling options, while necessities in the near term could be met by the IEA release from reserves of 240 million barrels of crude. Still, the agency warned that from May onward, more than 3 million BPD of Russian oil could be shut in due to sanctions. Other major global oil trading hubs are also planning to curtail crude and fuel purchases from Russia's state-controlled oil companies in May, according to Reuters. On a weekly basis, WTI crude futures gained nearly 10%. The annual inflation rate in the US accelerated to 8.5% in March of 2022, the highest since December of 1981, from 7.9% in February, and compared with market forecasts of 8.4%. Energy prices increased 32%, namely gasoline and fuel oil, as Russia's invasion of Ukraine pushed crude oil prices higher. Also, food prices jumped 8.8%, the most since May 1981. Also, inflation accelerated for shelter and new vehicles but eased for used cars and trucks. Excluding volatile energy and food categories, the CPI rose 6.5%, the most in 40 years but slightly below forecasts of 6.6%. Many analysts expect that March will mark the peak in inflation, although the war in Ukraine is far from over. Supply chain bottlenecks persist and consumer demand remains elevated, which is likely to weigh on the CPI for longer. The gold price is up this week, probably due to a rush into safe haven assets during times of market uncertainty. Gold closed at $1,973.2 an ounce on Thursday, posting its second straight weekly gain, as the Ukraine crisis and broadening inflationary pressures lifted the safe haven metals appeal, while investors seem to look past impending interest rate hikes from the Federal Reserve. The latest data showed that the US annual inflation rate rose 8.5% in March, accelerating at its fastest pace since December 1981. Meanwhile, investors remained on edge over the Ukraine war after US President Joe Biden announced an additional $800 million in military assistance to Ukraine on Wednesday, ahead of a wider Russian assault expected in eastern Ukraine. Uncertainties and a potential escalation in the Ukraine war have also pushed commodity prices higher, creating a more inflationary environment. The Bitcoin price is down this week. This may affect some cryptocurrency-related stocks like crypto exchanges and payment services, crypto holders and miners, and even chip makers in the semiconductor industries. The average prices of single-family houses with mortgages guaranteed by Fannie Mae and Freddie Mac in the United States increased 1.6% from a month earlier in January of 2022. The most in 7 months, and accelerating from an upwardly revised 1.3% gain in December. For the 9 census divisions, monthly house price changes ranged from plus 0.1% in the New England division to plus 2.2% in the South Atlantic division. Year on year, house prices advanced 18.2% in January, up from 17.7%. Rising mortgage rates in January certainly reflect a major change from the past several years, but lending costs remain relatively low. The mortgage rate shift has not dampened upward price pressure from intense borrower demand and limited supply. One of the important financial news now may be that the average U.S. interest on a 30-year fixed-rate mortgage reached 5% for the first time in a decade. A week ago, the interest rate on these loans, the nation's most popular mortgages, was 4.72%. 15 months earlier, mortgage rates were at all-time lows as the Federal Reserve kept its benchmark interest rate near zero to boost the recovery from the 2020 recession sparked by the coronavirus pandemic. Mortgage rates and treasury yields have risen as the Federal Reserve accelerated plans to raise interest rates to fight high inflation. These market conditions have probably affected the performance of our portfolio. Now we come back to our portfolio review. This is the full list of 25 stocks as of April 16, 2022. The total paper value will reflect the actual performance of the portfolio and market volatility. The total value is 72,030. It was 74,584 previously. The portfolio has decreased in paper value, however, it presents a nice opportunity for buying and accumulating more shares. The true underlying value and fundamentals of this portfolio over time will probably best be reflected by the total earnings of all shares. The portfolio pay ratio is 55, previously, it was 57.3. The total earnings of all shares has increased from 1300 to 1308. That means the fundamentals of this portfolio has been growing. This is really good. The total trailing 12-month dividend is 115.2 down from 116.5 previously, probably due to quarterly fluctuation. The portfolio dividend yield is around 0.0016%. Previously it was around 0.0016%. There was not much change. Overall, this portfolio has decreased in paper value. This presents a good opportunity for long-term investing. The true fundamentals that we should be looking at, that is, the total earnings of all shares has increased. That means we are on the right track in investing. The trailing 12-month dividend has decreased, probably due to quarterly fluctuation. We will follow up next time. The dividend is really small but may give us a hint on the overall financial conditions of companies in this portfolio. You can have your own version of this portfolio and play around with some ideas to add or remove some stocks. I will update this portfolio weekly and track its performance. We will review the stocks in this portfolio in the near future. Now that's all for today's 25G portfolio review. Click the subscribe button for more portfolio updates. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.